One of the things about commercial real estate that I think is super, super important to know is that the value of these assets, guys, is not based on comparable sales, which, as many of you know, that's how we look at comps in single family. In storage, we get to do something called forced appreciation. So the value is based on the income that that asset produces. So doing simple things like raising the rents, introducing a late fee or an auction fee or a lock fee, all those things increase the bottom line, the net operating income, which has a multiple effect on the value of the asset. I'm not dealing with nearly as much competition. I remember my acquisition managers would get to these appointments, and we were doing belly to belly in face appointments back in the day, and there would be 20 to 30 postcards and letters that, by the way, all basically said the same thing, right? We buy houses cash and we close on your timeline and no fees and blah, blah, blah. Well, when we talk to storage owners, maybe they've spoken to a handful of people in the last year, like if that. So we're not dealing with the level of competition. And then when I talk to people about storage, I ask them, like, why are you interested in storage? Inevitably, what I always hear is cash flow and passive income, right? Probably 70% of the time. And this is a business that provides a steady, consistent stream of cash flow, which is great. Now, why does it provide a steady, consistent stream of cash flow? Because of this picture right here, right? This cute little girl that's got like a bunch of chocolate in her hands. It's a very sticky product. So what do I mean by sticky product? Well, the average length of stay at our storage facilities is about 2.5 to 3 years. So when somebody moves their contents into a unit, let's call it a 10 by 10, a 10 by 20, the pain of disconnect is so high. What do I mean by that? So I'm looking at Jeff. Imagine if Jeff moves all his stuff into a 10 by 20 unit. Like, what would it take 3 months, 6 months, 12 months down the line for Jeff to move his stuff out? He's got to get a pickup truck or a U-Haul truck. He's got to hire a moving company or bother a bunch of friends and family. He's got to take a Saturday and or a Saturday, Sunday to get his stuff out. So the fact that people move in, it's a very sticky product, and it's what's considered a nuisance expense. So in storage, on average, people are paying between $50 a month all the way up to $350. For many people, that's not going to make or break you, and so people just tend to stay month after month, year after year, and that provides a lot of capital. I'm not dealing with this. So I started building a single family rental portfolio back in 2017 when I quickly realized, hey, I'm making all this money wholesaling, but I need to put this into cash flow and producing assets. So like many of you, I'm sure, who have rental portfolios, I started buying rentals in Cleveland, Ohio. I live here in Miami. And even though I had a property management company that was managing that small portfolio, I had to deal with stuff like this, right? The wrong tenants tear it up, and then we have to put a bunch of money into it. It kind of wipes out my cash flow for the year, or I have to replace a furnace or a roof. And so the $200 to $400 a month I was making per house, when I would have an event like this, it would kind of wipe. And so what I realized was that this rental portfolio is really more of an equity play unless I'm going to scale for volume, right? Like I have friends that own 100 plus single family rentals. And ironically, they're in the process of kind of downsizing because the management is such a headache. Well, I love storage because the management is very simple. When I had the 3 facilities about 3 months ago, I maybe would spend an hour to an hour and a half a week managing that portfolio.